Welcome to Landmark Talks Property, a podcast by Landmark Information Group that covers all things property in short and intelligent podcasts.
Good afternoon, everybody, and thanks for joining us for this episode as we cover the latest from our commercial property trends report. I'm Rob Steadman, I'm the Sales Director at Landmark Search, and I'm joined today by our panel of Landmark experts. It's really great to welcome back Josh Brains, the Managing Director of Landmark Geodata, along with Chris Loaring, Managing Director at Landmark Legal and Argyll Environmental. And I don't know how he fits the timing, but Chris is also Landmark Group's Sustainability Director. And brand new to the podcast today, it gives me great pleasure to welcome Gary Donaldson, who's the Operations Director at Millar and Bryce. And if you gents will let me set the scene, if you like, for today's discussion. We've just got our hands on the latest Landmark's 2026 Commercial Property Trends Report. And it's packed with fresh insights from Q4 2025 across England, Scotland and Wales, and that's covering everything that's been happening between October and December. Now, yes, residential activity took a brief breather thanks to some jitters around the autumn budget, but here's the headlines. Right? The commercial market held firm. It stayed steady, it stayed resilient, and it closed out the year on pretty much solid ground. And I think we're going to break down exactly why that matters. The report pulls together rich data from across Landmark's own systems, plus key partners like HMRC and also Barber ABI. So if you're navigating the ever-moving world of commercial real estate, this is the kind of stuff that you want in your toolkit. So let's get into it as we unpack the standout trends from Q4 25 with our panelists. But before I do hand over to all of you, let's take a quick look at the due diligence activity. I'll give you a quick guide through the key trends in England and Wales, and then Gary, if I can ask you to give us an overview of what's been happening in Scotland. So for England and Wales, as I mentioned in the preamble, the commercial property market in England and Wales has avoided much of the year-end slowdown in October through to December, as we saw in the residential market. Activity has largely remained pretty steady and stable. But due diligence activity remained strong in the first two-thirds of the quarter before the usual festive turndown. And that bodes well for commercial transactions as we gaze into 2026. But Gary, if I can come to you and ask, how did the Scottish commercial property market fare in Q4?
Thanks, Rob. I think the overall picture in Scotland is not that dissimilar, really. I think Q4 was Scotland's softest quarter in 25 for commercial property. There were certain sectors in commercial property that were really buoyant, and I'll touch on them in a second. And as you kind of already alluded to, we did experience a noticeable slowdown related to the timing of the budget. Of course, in Scotland, the budget was later than the Westminster budget. Westminster budget was end of November. We had to wait until January to hear the results of the budget. And of course, in Scotland as well, there's lots of property-related matters that are devolved to the Scottish Government. So when the budget's announced in Westminster weeks before Holyrood, then the Scottish market does experience a confidence gap, and I'm sure we're seeing a bit of that in these figures. Commercial search volumes were slightly down in the last quarter, 4% down in Scotland, indicating a cooling of transactions, and that aligns with that general theme. Not a collapsed, but a hesitant market responding again to that budget-related uncertainty. Again, despite that softening, the market has remained stable. Activity is kind of comparatively firm relative to the residential sector, as you mentioned, which saw a more significant pause around that budget uncertainty. Some of the sectors that performed really well in Scotland were, retail, particularly shopping centres and prime high street assets, which was one of the strongest performing sectors in commercial property. Also, we saw retail warehousing continuing to attract strong investor interest. Also, prime grade A office stock, there's clearly still very strong demand for ESG compliant buildings, perhaps less so for older stock. And an emerging sort of trend that we've started to see in Scotland is land for data centres. Growth of AI is creating a demand for land, and Scotland's been seen as a promising location for future data centre developments. And some of the reasons are around combination of abundant renewable energy sources. We've got lots of available land. There's a strong engineering workforce in Scotland. So we're expecting to see kind of more in that space. The Scottish Government are actually encouraging data centre developers, and there are 20 plus potential sites that have been identified. The flagship example of that is the £4 billion investment in Ravenscraig regeneration in North Lanarkshire, which includes one of the UK's largest AI-ready data centres, and that's expected to support around about 2,000 long-term positions and inject over £1 billion into construction. And then I think finally in Scotland, what we're seeing, of course, is the renewable energy sector itself continuing to drive sustained growth in Scotland. And we're personally seeing that through some of the services that we provide in that space, like our land referencing service, like identifying access rights and ownership, supporting infrastructure upgrades and helping with infrastructure corridor planning. And I expect, to see further growth in that sector in the near future.
Let's keep our fingers crossed. Thank you, Gary. Chris, if I can just kind of lean on you really and bring you into the conversation, if there's any other, headline stats from, environmental due diligence or, search ordering that we can see as comparisons year on year.
Yeah, Q4 from an environmental due diligence point of view is probably the hardest of the year to kind of drill into for obvious reasons. As a first point in terms of seasonality that you would expect anyway, with the Christmas downturn and everything else. But actually, another factor that kind of skews when you look at the Enviro DD performance relative to transactional baseline is the fact that the previous year there were some pretty high months in terms of HMRC logged commercial transactions towards the back end of the prior year. So there's not a great data baseline, I suppose, is what I'm saying, to kind of to take a huge amount out of Q4, other than to kind of Gary's sentiment. If you start to drill into particular segments of the commercial market, the one that stands out the most for us, not just in Q4 but through the year, we class agricultural transactions within the definition of commercial, and that segment has been super strong. In fact, it's the highest performing segment that we see. So yeah, that's one of the standout takeaways for me for the last 12 months is the performance of that segment relative to prior years. But yeah, I think you need to take a view of the full year to get a real picture of kind of overall market performance. And like you said off the top, the headline is very much the commercial market is pretty resilient, and it stayed, if you take a full year view, it stayed pretty much in and around the 100% year on year mark. And it's the same trend for enviros. If you squint, you might see an up and a down in consecutive months. The only real kind of headline would be that if you crunch the numbers, the second half of the year is slightly less, but you're talking of having to squint to see it. So it's pretty consistent.
So yeah, consistent, stable, and hopefully something that gives us some confidence around predictability in the short term.
Absolutely.
If we move it on a little bit, gentlemen, just thinking about commercial planning applications and specifically the volumes that are associated there. Josh, you're probably best placed to give us a bit of an overview of what the report's highlighted in Q4.
Yeah, so I think it's interesting from our perspective. So what we've tried to do when we've crafted this report is look at the various touch points that we see throughout the commercial cycle, whether that be the early stage due diligence, whether that be the planning, or whether that be the sort of registration and land registry titles, sort of confirmations at the end. I think the challenging thing, and I hope you guys will agree, is commercial is a lot less linear than we typically see through our residential report, where we can see the sort of touch points and the nature of the sort of when we expect the next milestone to be met. That's sort of a known property. And I think with commercial, we see that sort of, yes, the seasonality and the requirement to maybe squint at the numbers in terms of overall numbers come up and down, but actually the continuation of projects and individual assets is sometimes hard to pick out as we've done that. And I think just going back at one point on the due diligence side of things, what we also see is where we see major portfolio activity or significant periods of investment through a particularly large scale opportunity, that can flex the numbers as well, particularly when we get into December and the tail end of the year. And I think we saw that on some of the due diligence side, and that's a reflection of asset owners approaching the management of their assets in a smarter way, and actually after a number of pretty difficult years, particularly within some of the retail spaces, is looking at new ways to assess and leverage those, whether that's through sale and leaseback schemes. We've seen some of that drop into the numbers as part of that. So I think that's an interesting sort of use case of the due diligence that we see under the commercial side that is typically not that linear, one step following another. Looking sort of slightly beyond that in terms of the planning application numbers. So we categorize our planning applications by sort of split between small and large, and typically that relates to the overall scheme value. A couple of the headline numbers that I'd call out is that the smaller planning applications trending strongly, particularly across October and November, 18% and 8% up year on year respectively. And large scale planning activity, while sort of muted, didn't deviate significantly from what we saw earlier in the year as well. There may have been a bit of sort of impact as we looked at the lead up to the budget, but again, probably continuing the trend that we've seen for the previous 9 months of the year as we've gone through those. And again, I think probably what we see as a representation of that is the impact of confidence and also investment decisions for planning, wanting to get a sense of how the national planning policy framework plays out, how some of the direction of new towns and new requirements we see through that, as well as any sort of reforms on the attack side of things on that aspect. And then from a small planning application side of things, there's a couple of things that have stood out and sort of been commentary points, I would guess, throughout the year. In particular, focusing on change of use and ensuring that assets are maximised, whether that be through singular use or moving towards more of a mixed use model that we see some of that. So a couple of hypotheses and sort of trends that we've seen as we've gone through the year on that side. But like I say, the headlines really being strong performance across the small scale planning applications and a sort of continuation of the slightly muted but not comparatively different to the rest of the year on the larger scale activities.
Thanks, Josh. And that's beautifully put and nicely summarised at the end there. Unless any of our colleagues want to comment any more around planning data, perhaps I'll move us on and switch the focus up to have a look at environmental search activity. And Chris, it'll be no surprise, I'll probably lean on you a little bit here around giving us some broad brush strokes of what's been going on in that space.
Yeah, happy to. I think, as I said, commercial, you can really depend on it through the year. It's been pretty robust and pretty reliable. There's not as much variance as Josh was calling out in terms of planning. The categorization of kind of small and large planning applications. If you wanted a similar comparison in what we track in environmental, it would be what we call kind of high street transactions versus kind of premium end transactions. And if you really dig into that, there's not actually any variance at all in terms of what's going on there. Normally, there is, and that can represent one of two things. It can either mean a really challenged market or a very buoyant one, depending on the profile of what's going on. But as I say, both of those types of kind of transaction and both of those types of law firm are equally performant in what we see. So all that says is it's a very stable environment, and it might be a relatively low level in the sense of it's in and around 100% year on year. It's not in super growth mode, but I think, as you said earlier, if you're looking for predictability and something to build a plan off of, the commercial market at the moment is probably as good as you're going to get in terms of environmental search activity. It's not subject to the ups and downs that you've seen in the residential market, not just in the last 12 months, but in the last sort of 3 to 5 years.
I think you're right, and look, I say that I don't want to be held to those crystal ball predictions, as I'm sure none of us do. But from your point of view, what have you seen? We're early into 2026. Are you seeing continuation of what finished 25, or do you think there's room to be optimistic as we go into the spring?
Yeah, I definitely think the latter. The only additional word I'd put into that phrase would be cautiously optimistic. Like we're not going to see a market that grows, by double figures year on year, unless something fundamentally changes in either financial markets or socio-political kind of environment. So yeah, it will be a relatively positive environment, I think, in terms of a market, but it's not going to be supercharged.
Gary, Josh, is there anything else that you, I guess, want to add in terms of environmental search activity?
No, I think just to follow on from Chris's point, I think, like you say, that the reliance and maybe stability that's starting to see, and that statement there of cautious optimism is sort of echoed in some of the market feedback that we see across clients and their own research activities. So there's a definite change of narrative, I would say, in terms of that cautious optimism. And then I think, Gary, you're 100% right to call out some of the influences on the technology sector that are driving an increased use of some assets. And I think what we can expect to see through 2026 is potentially even a reframing of some assets that were previously maybe disregarded in some capacity and actually can be leveraged maybe for that sort of data center requirements and looking at them in a new light. So I think it's going to be an interesting one. And with the NPPF, National Planning Policy Framework consultation launch at the end of December, there's clearly a motive to get the policy side of planning in particular in shipshape and as clear as possible for some of these things. So I think that sort of cautious optimism around the market, the reframing of the use cases of some assets with regard to things like data centers, and the consultations that we see across some of the policy landscape, it's going to be an interesting mix, and the relationship across all three of those is going to be the key to seeing upside in 2026. Again, crystal ball gazing, but that would be my sort of opinion.
Not going to hold you to it, Josh. Thanks for that. That pretty much brings us to an end of today's episode. Obviously, as usual, we try to cover quite a lot in quite a short space of time, but I think the big takeaway is pretty clear, that the commercial property market across England, Scotland and Wales has continued to show resilience. Even if some of the year-end slowing we saw in other sectors, the commercial market has held steady and in many areas continued to build quiet momentum as we head into 2026. I think the key word for today's cautious, or key phrase, is going to be cautious optimism. But let's hope we build that quiet momentum throughout 2026. I think the data has shown us that due diligence activity has stayed strong through most of Q4 of 25, suggesting confidence. Transactional appetite, I think, is still very much alive. And on the planning side, small-scale applications obviously outperformed 2024 levels, which is an encouraging sign of ongoing early-stage investment, while I guess, Josh, as you talked about, the large projects have eased off slightly towards the end of the year, which is probably reflecting, as you said, that broader budget and macroeconomic caution. But look, environmental searches alongside that HMRC completions data, we've got a pretty consistent picture. So despite the reporting lags, activity has stayed stable throughout the quarter. But today's conversation has highlighted a market shaped by policy, funding conditions, but also planning sentiment, one that continues to show underlying durability, which is a nice place for us all to be. So for anyone working across legal, development, investment, or indeed lending, these trends really do offer valuable clues about where activity is rising, where caution is appearing, but also where opportunities may emerge next. So it's a big thank you to Landmark Information Group for the insights behind the report. Obviously, a big thank you to you, experienced and esteemed colleagues, for providing context to the data. And thank you for everybody for tuning in and having a listen. If you'd like to take a read of the Q4 2025 Commercial Property Trends Report, please visit landmark.co.uk, click News and Insights, and head to the Industry Reports section. I'm Rob Steadman, and as ever, thanks for listening, and we'll see you all next time.
Thank you for listening to Landmark Talks Property. If you've enjoyed today's podcast, please hit subscribe. This podcast is for general purposes only. The views expressed are those of the hosts and guests and do not constitute professional advice.